The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. If I was doing the show about 2 hours or 2.5 hours ago, it would have been a very ugly scene, but it's improved a lot. So we're looking at the Dow. It's only down 352 points at 24,663. It did hit 24,421, and it's rebounding. This is very important. The different indices are making different patterns. For instance, the Dow, the H, that dreaded H pattern that I keep talking about in the daily and the weekly, well, it never went to the 24,122 low in this incredible, intense 2 days of selling. It's really 3 days of selling. And to me, that's important because it's starting to establish a characteristic that I like to look at. And within the context of that, I look at an earthquake and the aftershock. Sometimes you can have one aftershock, sometimes no aftershock, sometimes a whole series. And sometimes the aftershock can be worse in damage than the actual earthquake. All right, so where are we based on the internal low, looking for a residual low? I think this is a series of internal lows that we're looking at, but the more we make, the greater the chances are that we are usurping downside energy and at the same time usurping some of that strength because of those rallies that fail and we go to lower lows. But as long as we're looking at this rotation where the Qs, the NDX 100 goes to a lower right side arch of that H pattern, the Dow and the S&P, let's just look at the S&P. Let me give you the numbers. Dow's down 357 at 24,659. The MACD is very poor in the daily chart. The stochastic is very weak. On balance, volume is trying to turn. Yeah, we'll see what happens by the end of the day. The weekly chart is still not very good looking at all. Parameters to look at, 25,000 area will be very strong. 24,800, 25,000 is going to be the next bounce resistance to take out if it's possible. A new low below 24,421 in the next few days says we're going to test at 24,122. October the 29th low in the Dow, S&P. I'm going to do this today and tomorrow because Friday we're off. At least I'm off. And so tomorrow will be the last day. We'll treat this as a series of Chapman Wave, greater look at the Chapman Wave methodology. S&P 2603.54 on the 29th. The low today is 2632.51. Quite a bit higher, 300 down points, 30 points in the S&P. So the MACD has just crossed negative. That's very interesting. The Dow was already negative. S&P today went, between yesterday and today, went negative. The day is young. I'm circling it for now, but that was a little premature. Probably should wait until the end of the day. And the stochastic is very poor at 43%. On balance, volume is not very good. Now what we're looking at is the weekly chart, same thing as the Dow. I'm expecting a wave 5 to go below 2603.54 at some point. Now, monthly charts all around with a week to go or so, not good looking at all. Well, actually, I say a week, so yeah, it's about a week. 11, 20, it's over a week. Okay. So QQQ, 1, 2, 3. Parameters to look at for the S&P is 26. I'd say 82 to 87 is going to be very strong resistance. Any new low would start to head towards that left side low of October the 29th. I don't think it was 29th. I think it was the day before. Maybe it was the 29th. Let's have a look. October the 29th. The low of 160.09 was taken out this morning. In the H pattern, you have two bars in which to close above and then start to rally. And if you do that, you can go up towards a moving average or a peak or a gap of importance. In this case, we're at 160.76 down, 1.33 at this, wow, which is so much worse. At this particular point, having gone to 157.13 3 points lower than the left side low. That weekly chart is in leg C, very negative, and the monthly chart is not very good looking at all. There is no quick way out of this. It's going to be a process. Be prepared for that. You might have some fabulous intraday, intra-week trades, lower lows and lower highs. That's what I'm seeing, regardless of what happens today. So within that context, it really needs to get to 162.50 to be even able to attempt to, if it can hold and close there, to get to the 165.86 9-period moving average IWM. IWM right now is trading down $1.29 at 147.57. The 145.80s low of the 29th, it wasn't touched today at 145.59. Oh, what am I saying? That couldn't be, I didn't correct that. That low was 144.70, and it hasn't hit it, but it's very close. I suspect at some point it's going to. IWM Russell 2000 doesn't look good at all at 147.57. 158.67 is the 9-period moving average. It's going to be tough to get there. Let's go to gold. We're going to go to the GC. The GC right now is down 2 at 1223.30. It's really struggling, but it's within a range. It's range bound. Same as silver. Silver right now is SI trading at the right thing. You know, yes, I did. What is that ahead? 14.09. Z. I don't know what the Z is, but let's go to the SI. Trading at 14.10, huh? 14.31, down 0.08. Leg A. Silver's actually establishing a little bit better chart formation than I anticipated. Funnily enough, gold, the weekly chart, let me just go back to it. The weekly chart has rising highs and rising lows in an up channel, and silver has an arch formation. So the daily silver is a little bit better just on the last couple of days. Gold is holding quite nicely. Let's go to the dollar and see where that is. When I last looked at it, it was up a little bit. Yep, it's up 43 cents, up very nicely here at 96.64. And this is leg A in the 120-minute chart, right at the 9-period moving average. 14-period and 9-period moving averages. I wonder if it's able to rally a little bit more. It's going to be very interesting because on the weekly chart, this has really improved. I showed my subscribers today to my opening call that this is a pattern of Chapman wave unconventional flat-based restart, but only works if we start to trade below 95. I think it was 95.77, I said, and we're at 96.64, almost $1 higher. So maybe it's still leg C with a D to go. Wouldn't that be interesting? Let's look at the euro. EUR USD trading at, it's down a little bit, down 0.006. 6 bips or pips or 1.13864. Leg A with a sharp pullback intraday, trying to form some kind of a base. It must hold 1.112 over the coming week, otherwise it's in real trouble. It's okay right now. USD JPY is the yen. JPY. We're going to get to that. I want to get to a lot of things with a lot of questions out there. So let me just do this. This is holding okay at 112.65. It really has pulled back a lot deeper than I thought. This is, I'm going to draw it in right here. The yen is in a rectangle formation right there. And it could just trade in this range for a little while longer. All right. 114 resistance. 111.70-ish support. I'll be right back and we'll look at crude oil, which right now is trading down 2.88. Oh my goodness, look at that monthly chart. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back, and what am I looking at here? I'm looking at, let me get out of this particular one. I was looking at crude oil. Now, this is telling us a story, because if crude oil has gone in a straight line, I haven't even got, look, this is still leg A to the downside. Remember lowercase in the Chapman wave? I haven't even got a trough yet. And this goes back to the high of 76.90 that was formed on, why am I not getting the, on the week of the 5th of October. Peak G on the 3rd of October. This is exactly the high of the all-time high of the Dow. I wonder if it's telling us a story. Leg F on the daily, leg A in the weekly, straight down. Well, let me just check. I need to just see. The monthly chart has no troughs until you go to the low of June of 2017 at 41.53. I haven't even got a doji candle, and we way past the low that was made back in February of this year at 56.23. So let me just pull this across here, a question about crude oil. So let me see. Crude oil, okay. So there is a little bit of an ictus, a little bit of a low, 53.35, and we're trading at 54.22. Let's watch that 53.35. I can't even make a left side, right side price time match here because it's already just zipped past it. Oh, this just does. We're getting close to an attempt to form some kind of a base. And I'll tell you what is really upsetting is that together with wood, which is the iShares, the global iShares of the Timber and Forestry ETF, WOOD, should be easy enough to type in. What happened? Yeah, wood. Going to that 200-period exponential moving average of 62.39 in the weekly chart, and it's at 64.08. I mean, it's just gone straight down. It's gone straight down from right here. 83.88 was the all-time high back in June of 2018. I would say that 83s to the 63s, 20 points, a quarter off just like that. Not good. Let's go to Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you?
I'm well, thank you. You'd like to look at?
Yeah, one, maybe two stocks if you have time, and these are a couple of your old recommendations. One is NAT, and every time I see the Dow drop 500 points, this is one of the very, very few stocks that actually either holds well or actually has been creeping up.
Except for the one that we've got in the utility sector. I just wanted to say, because I'm trying to put the relationship. We have a stock in the utility sector that even today, yesterday was it was up 1-point-something% when the general market was down 1.8 to 2.5 in the different sectors. And today we've got one in that same one is up 0.39 and the general market's down over 1.25%. So you've identified the sectors that the two of them are, how can I put this, are related to the market. One is a belated, it's not lated, it's belated, because in the shipping area, Nordic American tanker, this is where you've got folks who are looking at the potential for shipping. When that potential finally gets realized, I don't know how many times we've seen this over the years, you start to see it when the general market is beginning to top. And one of the reasons is it's because by the time they have the confidence to put in the orders, we're talking about shipping. This is a very expensive thing to be wrong. So what happens is they really wait until there's a backload, and then they can fill the ships. So this is dry shipping. And then what happens is they're on their way out in the ocean when the general market usually has either consolidation or something happens. Why? Because they've had to put the orders in. Just like in real estate, the real estate market doesn't top exactly with the general market. Usually what happens is...
So your point is that this could fizzle out here over the next several months after if there's a slowdown, they're going to see that come after the fact.
Yes, it comes after the fact. And two things happen. One is, unlike the utilities, which have also rallied during market relapses, and that's because in the utilities, you're looking at dividend, you're looking at the safety of something like a utility in electric or water or whatever it is. Ours happens to be electric, so it's doing very nicely. And it's a little bit, it's not independent of the market. What it's really acting as is a I don't know what you call it, as a balance to a down market where there has to be always something that goes up. In this particular case, the shippers are a little bit independent because they are looking at the economy like the Fed. In fact, the Nordic American tanker could very well be looked at as if the Fed, this is the Fed right here. We shouldn't call them NAT, it should be called FED, because the Fed looks at the data, the backward data, and they act and react on that. And this is exactly what happens here. Now, the big thing is that there was a high in November, it was on the 8th, and the high was at 347, and it screamed all the way from the 2s into the high 3s, and so now it's pulled back, and I have an alternate count now for the weekly. It's E/B. Why do I change it from a B to an E? Because the way the daily is acting right here is as if it's awakening. It's almost like, I bet the Fed in the last 3 days, the Fed's saying to themselves, hey, wait a minute, this rate increase in December, is that going to be okay? Is that kosher? Is that what we should do? So I think that this is the same thing. So now I'm going to ask you, what was your question?
Yeah, I'm just looking at, I'm watching stocks that are holding up seemingly during these big downtrends and potentially looking to start entering. The other one I was looking at is probably much more of a speculative play, is the CRON. It seems to be forming somewhat of a base at high 7s. So I was actually thinking about adding a little bit to each one.
Okay, here we go. So let me just tell folks, Kronos Group is in the cannabis area. It was a high flyer. It went from pretty much zero once upon a time. What was the low of this thing? I think it was like pennies. Yeah, it was 17 cents back in July of 2016. Had a little bit of a run. It ran to, let's see, so it goes from 17 cents to $15.30. I would say that that is a pretty big, and that was a leg D in the weekly, then a peak D in the daily and the weekly. Sorry, the weekly and the monthly, and now it's pulled back and it's trying to form some kind of base. Now, oh, there's the break. That was quick. So you know what? I'm going to do a couple of things during the break. I want to look at Kronos. I want to look at it a little bit more carefully. I want to look at a couple of the other stocks in the same area, and then we can come back and I think you've got your eye on something that might be oversold enough to have a pretty decent rally. So I'll be back with
those two, NAT and CRON.
Okay, we'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So I looked at a number of the cannabis-related stocks, medical, whether it's medical or non-recreational. I think that you've chosen one with a slightly better chart formation, at least than the ones that I looked at. So I'm going to do this. It's trading at 867, up 0.43 cents. The low that was made at 6.50 on the 30th has seen higher lows, but not higher highs. And in fact, there's a little bit of a wedge formation. But I like the way the technicals has formed. So in terms of risk reward, in terms of being outside the general stock market panoply of stocks that most people look at, in terms of sectors, this is the one sector I think that I'm seeing signs of at least an attempt. But this is the one that's held its left side low. Others have gone below it. CGC has gone lower. So this is the one that looks best. I don't know if you've looked at it that way, but I'm looking at this and I'm saying at 865, do you have a position at all now?
I don't. You know, what I look at is I look at the touch points on these big down moves in the market, and it seems like I think I counted 4 or 5 touches on the daily over the last 6 months around 7.5, 760, yes, somewhere there, and it seemed to hold there every time.
This is its cushion. This is its, not always is it a trampoline bounce area, but it's a cushion. Absolutely. Good eye. So I'm going to say to you, at 864 right now, I think this is a risk reward wise, I would start the position. This is a tough one because I would actually like to start the position and see if it breaks down below 752, but that's a 12% risk. So it would either have to be a small position, give it a 12% risk until it gets to, if it can get to 9.03, touch the 9s, I would immediately raise that stop to a much tighter stop. I might even split into 2 positions and have one with a stop, maybe a 20-cent stop from your entry point, and the other with a trading stop, maybe treat it that way, because it could form a U formation, and then U formation says, if it can close at any point in the next, not even a week, by Monday, if it can close any day, if it can hit it, it's great, but if it can close above 923 or 927, and this thing does move quickly, when it does move, it's really quite quick. It does. I think that would be a very nice way.
I think it's a great trading stock. I guess the only reason I would hold off, Basil, is if you continue to think that the 23,000s might get tested at some point, that maybe gives me another opportunity to add it, the 750 again. But
I think there's a really good chance that we're going to go at least to the 23,000s one more time, because that's going to be the big test for the market. Do we go below that, or do we actually treat that as a cushion, that previous Dow 23,300? Now, I had an email from Al, and he said, great, I bought the low on Amazon, right at the low today, and it's moving up. So I'm looking at this and I'm saying, there are a lot of people that are going to be looking at what happens today, especially in this quietish week, theoretically because of low volume, but it isn't a quiet week in price movement. But I think a lot of people are going to look at the Amazons and the Googles, let me get Alphabet, and they're going to say, hey, look, Google's held its left side low, Amazon took out its left side low. I think a lot of fund managers are going to say, we've been waiting for a re-entry here, and they're going to start, and this could give a little bit more of a bounce. But the way the patterns are looking, I think that even Amazon and Google will be testing these lows at some point over the next 3 to 6 weeks. But in terms of Kronos, just in terms of risk reward right now, I think this is a good opportunity, because out of the last 6 sessions, 1, 2, 3, 4, 5, 6. Well, yeah, the last 6 sessions, it's had only one red candle yesterday. So it's trying to say, attempting to form a base. And I think risk reward, well, I'm not saying, hey, this is great because it's going back to 13 or 14. I'm saying this looks great because if it can start a rally from here, it might form some independence from the stocks that I just spoke about that are really quite vulnerable to further selling, even though they could have a decent bounce. This one looks like it's attempting to make some kind of the stochastic in the weekly chart is improving. It's not great, but it's improving. The MACD will need work, but that only comes about if the price moves. Yep, I like it. And you said NAT. NAT is a different kettle of fish because it hasn't formed the same kind of formation as Kronos. This deep pullback from the 350 area to 280, and now it's at 292. It's a little too risky. I would much rather see it rally a little bit more. I'd rather be buying some strength here than weakness. So I'm just going to say I'd hold off on on Nordic American tanker shipping. Unless you wanted to take a chance on a trade, then just nibble at this and treat it as an experiment to see how well it can hold here. And if it starts to hold, then you can start adding. But I would not, I wouldn't get carried away.
Awesome. Basil, thank you very much, as always.
Thank you very much. I appreciate your call. Ben in Tallahassee, looking at NAT and CRON. Now, a lot of questions came in. Let me just do this. Yeah, I'm talking about the put ratio with a SPY. I'd rather look at the XRT right now. I want to be as practical and pragmatic here as possible for listeners and even subscribers who are listening, because they know what my position has been. And for weeks we've been saying, raise cash, you're going to get some great buying opportunities. XRT, this is the SPY to S&P retail. This is not a good sign. Hits the 200-period moving average today. Weekly, that is at 44.01. The low today was 43.76. Trying to bounce off that. I'm trying to put this together with the overall picture for this particular holiday season. And I have to tell you, the more I look at it, RTH, let's look at the RTH. Oh, of course, we had a real loser today. And was that Urban? Oh, no, Urban was the winner. Let's see. So this is down 2.42 at 98.54. The market vectors ETF, retail ETF. No, this is not good at all. Let me see. Urban URBN. I don't think I've got it notated. I used to have it notated. No, it's not notated, but it is up $1.57. What a candle. Goes down. It closes yesterday at about 35.60. Opens today 35.45. Goes to 33.59, spirals up to 37.80, 4 points. That's an 11 to 12% rally intraday. Now it's at 37.19. Oh, it almost hit the 200-period moving average in the weekly chart. This is a clue. There are just a few retails that are really doing well. What is JWN doing? I haven't looked at that for a couple of days. JWN, whoa. JWN was in the 66s just a week and a half ago. No, a week ago, and it's trading today. It hit 48.27, trying to rebound. You know, folks, I'm just saying to you, when you've had this kind of a rally for this kind of period, 9 to 10 years, and some stocks, maybe they're only 4 years, maybe 3 years, maybe 6 years, that the real big move has occurred, but it's still a huge amount of time. I'm just going to say to you, don't be terribly quick. If you aren't trading, don't be in a great hurry to pick up stocks for the long term, because you know you can still see a little bit more percentage terms of a decline. But if you, we'll talk about this. I won't rush this conversation. We'll be back in a moment, and we'll look at some of the financials. Basil Chapman, Tiger 50 hour does 92.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we were looking at Nordstrom, JWN, and now I'm looking at Target. Target is trading at 69.52. It made a low of 66.12. And look at that. 200-period moving average hit yesterday at 78.62. And today it plunges another 12 points to the downside. And it made a PE in the weekly at 90.39. In a month, you see a stock go from 90 to 60s. Hey, this is, you don't repair the damage in a couple of days. So this, and not only that, Target, give me a break. Target, I mean, Target is in the RTH. This is, in the retail sector. Target is really important. So what is TJ Maxx? TJX is, what is it doing? TJX, oh my, look at that. Everything is down. Well, it's a little bit of a green candle from the low of the day, but it went to the 200-period moving average in the daily yesterday and then plunges right through it today. So just in October, you're looking at a stock trading at 56. And in November, we're looking at a stock that is just at 45. This is serious stuff. This is not good. Not good at all. Okay, question about Goldman Sachs. Goldman Sachs is trading down 5.80, 2.92% at 192, leg B to the downside in a brand new sell mode. Oh my, the 200-period moving average is way at 211.55. The daily is way at 159. I'm not sure it's going to get there, but I can just tell you this ugly candle that we're forming right now is going to vie against the fantastic candle of November of 2016, the November takeoff from 174 to 220. That's a 46-point move up. Let's see what happens here, because so far, it's pretty much like a 40-point move down so far. So this is tough. I don't see anything just yet. Next question I had was XLI. XLI is trading right now. What is... So Bob says down 2%. Yeah, now it's a little bit better, down 1.88% in the arch formation. This is tough to get out of because it's almost like there's it almost made an island gap to the downside. I'd say that that's not a good scene. That's not good at all. And that weekly chart is very poor. So XLI is the industrials. It was a U-shaped double top. Chapman wave. Oh, maybe I'll talk about that tomorrow. Maybe someone will remind me tomorrow. I'll talk about it. This is the Chapman wave, drop bucket formation, double top formation in my CD introducing the Chapman wave methodology. It'll be chapter 22, the drop bucket or double top formation. and that's it. I'll talk about it tomorrow. All I can say is that it's underneath, and when the low is taken out of the cup, you can see a one-to-one extension to the downside. Nah, I don't know. That'll be, it's trading at 69 right now, and the high was made. XLI high was in January at 80.96. Nah, come on. Are you saying that could go down to the 63 area-ish? Oh, wow. Well, let's just go one step at a time. It doesn't look good. Doesn't look good at all. XLI. Apple, a relationship of Apple. Oh, I guess it's just a kind of a private IM here. Just when will Trump and Xi meet at the G20 in Argentina? I don't know anything about that. I mean, I just deal with it as it comes up, so I'm not going to speculate about anything. Okay, we've got a moment here. We're going to look at the VIX index, and I want to talk about the VIX in relation to a couple of things going on, but one that's most important is I just had a reading this morning. My Chapman trend gauge suggested that there could be within 2 days a 9 to 11 point rally in the E-mini. Now, I'm a little embarrassed because I send out every day, and I also posted in the den, my analysis of the S&P, the E-minis. But when you're talking about maybe the mini will be up 3 or down 10, and in fact, it turns out that it's down 50 or 60, I mean, that is not just a miss, that is embarrassing. But for me, it's not the question of the number. It is a question of what I'm saying is that if there is a rally to such a point where you get a positive, or if the negative still holds all the way through, and then I give a specific time, that's what you look at. So it's not the numbers of what's going on, it's where it is and which direction, because that's so important. It's just so difficult. I mean, if I said, if the Dow is up 300 points, maybe it won't be up 300 points. What if it's down 450? I mean, you got a 700 point spread there. So I don't know. At this point, I still want to stick with saying at 1120 or 115 or whatever the time is, if the S&P is, and it's anything below a certain point, it doesn't matter. If I say -8 and it's -30, it's below -8. And that says, say everything applies. It's just the numbers are so tricky. But the pattern is what I'm looking at. So that's really important. Now, if I'm looking at the VIX right now, with all this noise, we're not even close to the November, the October 11th high of 28.84, the October high of 27.86 on the 29th, and we're at right now 23, the high today is 23.81. So yeah, maybe I'll put that together with, I'll write, and let me write, I can't even find my book, I've been busy. When I tidy my office, then it's hard to find things afterwards. Otherwise, I always know where things are. It's in this category, or it's in this pile. So let me just write this down. For Wednesday, VIX, Trin, and there was one other thing I was going to talk about. You see, I've already forgotten. I'll try to think about it. I'll think about it. So what I wanted to say is that it isn't the 9 to 11, it's the fact that if there should be a counter trend rally. This is now what you got to think. Within 2 days, there could be a counter trend rally, which is saying to you that if you were thinking of shorting, be prepared that at any point you could get a counter trend rally that's very strong, and then it should revert to whatever the main theme is. And if the down mode for the day is still intact, it'll come back down again. All right? So I'm looking at this and I'm saying this is a gray leg B. It's under the previous peak C by quite a bit. And on the day, it's suggesting that holding at 22.88 is still very high, and that there's still enough buyers to maintain the upside of the VIX, the volatility index. And as long as it's above 19 in the 20s, it's saying to me, be careful, rallies could be doomed to some kind of failure. Not necessarily a particular stock that you got, Doesn't have to test the low of the day, but it just says, be a bit careful. All right, we've got a break coming up. I'll do a little wrap up as soon as we get you. Then, of course, today you guys, what's today? Tuesday, you got Steve, you got Dave, and then you got Tom. I'll be back with Tom a little later today. I'll be back in a moment. Now it's down 427.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, okay, so in this little segment right now, as we wrap up, I just want to show you a bunch of things. Right here, using the Chapman wave projections right there. So Amazon had 1439 as the weekly key support, and it went down to 1420, right? 20 points below. Now it's quite a bit above. It's a 1513. The 120-minute chart had a whole bunch of support levels, and now it is trying to bounce off those. What's really important is that the monthly chart had 1516, and it went quite a bit under it, and now it's right there at 1514. I'm watching that because if it starts to close below the low that was made today at any time in the next week and a half, 2 weeks, that's going to suggest that there's a much deeper timeout, maybe not so much more in points, but a deeper timeout in time and some points, but maybe the worst is done from 2050 down to today's low. That is heavy stuff. So there we are. So if you look at, I want you to go through some of the important stocks that really I think are worth looking at. If you look at Intel, which was holding very well, Intel is still doing, it's down 34 cents at 47.66. So it's going to be stock, as we come out of this, it's going to be stock specific. We're trying to do that with a particular, it's a tech stock. We took an entry this morning because we were in it before, and we got stopped out for a small loss of 1%, and then it ran very nicely. We tried it again today. I just didn't know where to put the stop. I didn't want to have more than the percentage, a 1 point stop, and here it is above our entry point, and that's tough. But I love the fact that it's acting well. It's showing me that maybe this is one we could start to actually put in more money because it should lead on the way up when the market eventually turns. When I'm looking at the dollar, just because it's kind of important right now, because we're going to see whether the British pound has a Brexit big pop-up. But at this point, the dollar is acting very well. It's back to the 96.60s. You know, it held the 95.92 a low right there. That's an automatic projection, and it held it. So this is a market, a very mixed market. It's dangerous. Be careful. Anything you buy, put in a tight stop.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.